I have two tips for you today on giving. So the first type of giving I'm talking about is just personal gift giving. And I don't know about you, but I always find it pretty easy to get a little carried away by the holiday spirit and end up spending more money than I had intended. And I actually have a Christmas account set up that I save in because I'm super nerdy like that. But however you plan your Christmas or holiday spending, it's easy to sometimes get carried away by the spirit. And if that's happened to you, something you might try doing is just a simple spending detox. Choose 1 or 2 days. If you are thinking this is something that would be good for you, make that day tomorrow. Just go ahead and dive in. Don't spend any money at all. So it's no coffee, no gas, no groceries, definitely no visits to Target, no online shopping, just completely cash-free, debit-free, credit-free day. And allow yourself to just take a second and detox a little bit on getting that dopamine hit we all get when we spend money. This isn't about feeling guilty or having shame about what we've spent. It's just about taking a moment to reflect and making sure that we're living by the spending plan that we've chosen for ourselves. And if you find that you've maybe purchased gifts that you feel like have maybe gotten out ahead of yourself a little bit, it's okay to take those back and exchange it for something that fits better within your spending plan. So no guilt, no shame, but you definitely take a moment to reflect and see how things are stacking up for this December. The other giving idea I want to talk to you about has to do with charitable giving. This time of year, a lot of people like to write checks to their favorite charities, but that's actually not the most tax efficient way to go about giving to charity. If you have a taxable investment account and you own stocks or ETFs or a mutual fund for at least 1 year, you could give away that security, that stock, bond, mutual fund, directly to your charity. And if that has a capital gain in it, which means that when you bought it at $50 and now it's worth $100, you can give away that $100 security with that $50 capital gain in it to the charity. They don't have to pay long-term capital gains taxes on it. Then you can replace that asset that you donated in your taxable investment account with the cash you were going to write to the charity. And so you basically just gifted out the taxable gain in your portfolio so that you can still benefit the charity, and you're benefiting your bottom line even more by getting rid of that taxable capital gain in your portfolio. So if you have questions about this charitable giving strategy or other ways to make your personal financial picture more tax efficient, please feel free to reach out. For all my clients, this is something that we've been talking about and will continue to talk about as your needs arise.